Well, let's go now to CNN Money's editor-at-large, Richard Quest, who's live for us in Mumbai at the moment. Richard, instability, the buzzword seemingly across all markets right now. Worrying times, of course, for market investors, but equally worrying times for ordinary consumers as well.
Yes, because we simply don't know the depth, the range, and, if you like, the severity of this. Looking at the economic digests, it's clear this shouldn't be happening. Economic growth may not be brilliant, but it's not dreadful either in all the major economies. And although on inflation there is none to be seen, that should also be a positive. Add in the continuing very low interest rates, and you're left wondering, why are markets so unhappy? What are they telling us? And whether or not this is deep-seated structural issues. And everything I've read so far suggests it is not. That what we are seeing is dislocation, discombobulation, whatever word you want to use, as a result of this falling oil prices. You've got a bit as well from what's happening in the EU and the Eurozone. And, of course, you've got a US presidential election thrown into the mix, and you've got China's slowdown. But the big question, of course, remains the question of oil prices. And I'm very glad to say, Hannah, one of the things we'll be doing now is having a much greater, bigger global coverage of all these issues with the new CNNMoney as it goes international. A brand that is well known in the United States, respected for its depth and coverage. There's now going to be a new, brand new version, an international version, pulling on from my colleagues around the world, Hannah.
Richard, whilst we've got you as well, tell us why you're in Mumbai. Why is India turning into such a big player on the global financial stage?
Well, India, with its last GDP numbers of 7.3%, is the fastest growing major economy in the world. Low unemployment, low inflation, a central bank that has strong control of monetary policy, an economy under reform, and yet a stock market that is a bear market. India is a good example of exactly the conundrum, as it's being called, facing global markets and global economies at the moment. There's no reason on earth for this place to be suffering other than it cannot withstand the tide of the global slowdown. Now, oil. I mentioned about oil. The reason, of course, India's doing rather well is low oil prices. Low oil prices mean this importing country has a surplus as a result. John Defterios is in Abu Dhabi. Another strand to this CNN Money global coverage. Andrew Stevens in Asia. Maggie Lake in New York. Myself somewhere in between. Nina Dos Santos in London. John Defterios in Abu Dhabi. John, your oil is messing everything up.
That's a good, simple way to explain it. In fact, Richard, you are correct. We've had volatility since the start of 2016. That's been the buzzword. And, in fact, we saw a great extreme of that last Friday with that 12% jump on the New York NYMEX crude, taking oil from a 12-year low that we'd last seen in 2009. Let's take a look at the volatility since the start of the year, and you get a sense of what I'm talking about. We've seen $3 jumps on 3 different occasions, January 25th to the 29th, February 2nd to February 3rd, and again last Friday. And the biggest issue we have right now is this surplus that you see on the screen, Richard, 1.75 million barrels a day. That's what the International Energy is suggesting, agency is suggesting we're going to see in the first half of 2016. Now, at the heart of this here is whether the major producers of the Middle East, where I'm sitting, led by Saudi Arabia, can agree behind the scenes with Russia at this stage to try to cut the surplus crude. We know, in fact, that the supplies are coming down in the United States by some 500,000 barrels a day this year, but we have, in fact, a surplus that needs to be dealt with. Both